Carolyn Rivera here from mining.com.au. Joining me now is Toubani Resources CEO Phil Russo. Phil, nice to see you.
Hi Carolyn, thanks for having me.
Phil, the board has approved the company's plan for an optimised DFS for your Kobada Gold Project in southern Mali. What brought this about and what exactly is the company pursuing?
Yeah, so since joining the company earlier this year, we've been our approach to unlocking value here has been two-pronged. We've been exploring an extended strike to 11 kilometres from the previous 5 kilometres as part of the drill program. But in parallel, we were also looking at the 2021 DFS and ways to unlock value on that study. And so today's announcement culminates in our investigation into that past study in terms of ways of unlocking value. And so today we are initiating that work program, and we're really focused here. We believe at Kobada, the best foot forward for the project is yet to happen, and that there is a higher production, lower cost project on offer here, and that is what we'll do as part of the DFS.
And the update is due to start this month. What will the program exactly entail and how long do you expect it will take?
So we're targeting completion by the end of the year, and the update will focus on 3 key areas. So firstly, a processing rate that better aligns with our mining rate. So the previous study moved more material than we could process, and we built up excess stockpiles over the course of the first 10 years. What we're doing here is to better match our mining rate with our processing, and so a higher throughput rate will mean lower processing costs, be able to get some of our fixed costs down, and that means we're going to have a stronger production profile. I will also point out that as part of that, we're still really an oxide-focused project here. We've got a lot of fresh rock optionality in the back end, but because we're trying to deliver a larger oxide project, we think we can be capital efficient, if I can call it that. So we're not looking at huge capex here. So that's another advantage for Kobada. Secondly, the equipment configuration here. Previous study utilised 55-tonne trucks. We think we can use a larger configuration of equipment, so larger excavators, larger haul trucks, and really drive down our mining costs as well on a per unit basis. So another opportunity to pursue. And then thirdly, inferred conversion. We've got a modest amount of inferred ounces in this pit designed from 2021. Targeted drill program on those ounces will help convert that from waste into ore, reduces our stripping ratio, and reduces our costs even further. And so when you put all those together, you've got yourself the recipe there for a pretty interesting project.
So do you think this will put you on track to becoming one of the major players in the region?
Yeah, I think that's the overarching strategy, is delivering a project here that people aren't aware of at Kobada, and that is a project of scale and of relevance, of significance. And so we were 100,000 ounces at 10 years, and a cost base of around $1,000 US, 970 it was. We're trying to improve on all of those metrics here. So we think we can do a production rate higher than 100,000 ounces. We think the mine life will be pretty similar, if not better, at higher throughputs, but also that cost base, a higher throughput, lower mining costs. It's going to present a really attractive cost base. And then in turn, that's going to mean stronger economics. And so that sort of project with the economics that we think we can deliver in the coming months, those sorts of assets don't stay as projects, they become mines. And that's what we're really focused on. And so, yeah, we're really excited about the next 6 months and what Kobada could yield.
Great. Phil, thank you for your time today.
Thanks, Carolyn.